Hi, welcome to this episode of Finance Friday. So, yes, I have talked about sharing some tips on improving your earnings and your personal finances, right? Like I said in one of the videos, I seem to always be talking about how to cut costs, right? Even though we know that it is a whole lot easier to cut costs than to increase earnings. One way that you could increase your earnings in terms of personal financing is investments. So I know that some of you are very happy to hear this. You've all wanted to hear about investing. Now, investing is not a walk in the park. First things that you should consider when you begin your investment journey is to decide what kind of investor you want to be. Do you want to be a short-term investor, investing solely so that you can, trade your options and take the difference in 3 months, in 1 week to 3 months, those that watch the charts, or you want to be a long-term investor, people who invest for the long term and majorly get their benefits through the compounding effect. It all depends on you, what you set out to achieve, what you're looking forward to, and what your investment thesis are. So, what are the first three things you need to do when you're looking to go into investment? The first thing is to know why you're investing. Like I had mentioned, there are people who are investing simply because they want to, make a quick trade. Those people typically take their sales in less than 3 months, 1 week to a month or two. They buy low and sell high, and those are short-term investors. And then there are the long-term investors who are, just stacking their options, right, and uh, building their portfolio. And that's where compounding really works, because the person who starts saving at age 10 would definitely have a whole lot more than the person who started saving and investing or started their investment journey at age 15. One of the advantages that our dearly Warren Buffett has. Okay, so number one is to know why you are investing. Number two is to know the market, know what the market wants, know what is obtainable in the market. Now, people with limited understanding of what the market sees and how the market moves will always get the short end of the stick. I mentioned in the video where I talked about the lessons I learned from Warren Buffett, being that he never invested in a business he did not understand their business model. Right. So you need to understand what the market says, read books, take courses, read journals and all of those things. Understand the markets, the finance markets. Three things to do when you begin your investment journey is to be wary of who you take advices from. Right. Like I often say, I am not a certified investment coach. However, I could tell you some of the tips that I have, explored that has helped me up until this point. And one of those things, the number three thing, is to know who you're taking your advice from. If they are not certified investment coaches, investment advisors, I advise that stay away from those advices. And so if you don't know what you are searching for, right, anybody's free to advise you. Diversify, right? A part of knowing your investment strategy or understanding your reason for investing would be that you know what you want, and a part of knowing what you want would mean that you will spread across your investment across different asset classes, right? There are stocks, there are bonds, there are alternatives investment asset class, which includes cryptocurrencies, copyrights, intellectual property registry and rights, and all of those things. You need to understand the different asset classes and spread across them, which is what we call diversification. In the next video, I would speak about some key topics and words in investment, and I will be demystifying them.